Good afternoon, everybody. Kirk Spano. It is September 27th. I would say that summer is officially over, except it's been 80 degrees here in Milwaukee for 3 days in a row, and our pool is closed. Condo board. In any case, a couple of announcements. House cleaning. People wanted things a little bit more clear and to the point. Well, I've been doing that for about a month, so I've got templates and a schedule for everything. First thing first, I'm going out of town next week, so you won't see me a lot. I was just going to go out of town for 2 nights up to Door County, Wisconsin, and then somebody thrust Packer tickets on us, so now we have to go for 4 nights. So I will be gone from Sunday morning until Thursday night. I will check in on the chat, and I really think you should be in there because one of our new plug-and-play stocks is from a discussion that started on the chat board. Plug and play updates will be out on Saturday, and a new article, Macro Dash. If you notice, I put this together a couple of weeks ago. This is the schedule I'm going to stick to, and I wasn't sure what I was going to call the macro article, but I'm going to call it Macro Dash. For any of you who read Jeff Miller's piece, Weighing the Week Ahead, I knew Jeff. I probably knew him 5-6 years. And he passed away this spring, but his Dash of Insight website, which is where he hosted the Weighing the Week Ahead articles, and then he reprinted them here at Seeking Alpha, I thought were really good articles. So I'm going to do a light version of that. I'm not going to put quite as much into it time-wise. Jeff would work on those articles for literally a day and a half. I'm going to put mine together in about a half a day. But we're going to cover the 3 big macro themes that are impacting the short and intermediate term every Thursday. Those will be the basis of the webinars on Friday, where I apply those themes to ETFs. And then, of course, we've had the quarterly outlook and game plan in the past. I'm going to make that a standard feature. I have a format now that I want to use, including a what to focus on now section for people who are new with the service, or people who are, just getting started, or maybe halfway into getting their portfolio flipped over on that plug and play path. I just finished the SPAC article, so we will get to that in a minute. But let's take a look at the Global Trends ETF real quick. And the question is the are the large caps going to run again? I think that looking at the relative strength index can help us with that. So if we take a look at the relative strength index here on a QQQ chart, we'll see that on the daily, it's been coming down for about 3 weeks. But what does that mean in the scope of the bigger picture? So let's switch to the weekly chart. What we see is that RSI is just barely not overbought anymore. So basically, having the market chop and drop just a few percent has barely moved it on the weekly chart. So I think the thing that we ought to be considering as well, that would indicate to me that we're probably going to get a little bit of a uptick in large caps, right? A little relief rally from the downtrend on the daily, but that at some point the downtrend on the weekly will resume. Now, something to take a look on the longer term chart here is that from the point where the QQQ becomes overbought to the point where it becomes almost oversold, it gets down to the 50 line, right? It goes from 70 to 50. This stretch here is the longest one in history. Breaks the one from, I believe it was February of 2017 to March of 2018, so 15 months. We are now at 16 months. This is the next biggest one. And what do all these lengthening periods have in common? Talked about it in the last article. What's new the last 12 years? It's really new. Federal Reserve does it. Do, 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 do. There you go, Mitch got a QE. Yeah, QE is the new animal in town. Never had QE before 2009. 2008, late 2008. So the idea that these cycles should be getting longer and longer is wrong. unless you believe QE is forever and for infinity. You can see that usually when they tighten up on QE, the market flattens out like it did in 2014-15, or we get a lot of violent corrections like we did in 2018. And in 2020, I think it was going to happen again, but we got coronavirus and everybody blames the correction on coronavirus. I think that they were going to probably get rid of QE right around a minute after the election, and then we would have got that correction anyway. So even though 2020 could have been a good year, probably would have just pushed off the QE taper tantrum. And now we're going to get probably a super taper tantrum because we are basically ending or trying to end. If you saw my Twitter feed, you know that I don't believe they'll actually finish. They're going to start to end the biggest quantitative easing monetary experiment in the history of the galaxy. And I won't say the universe because we don't see quite that far, but we know what's in the galaxy. So what do I think about that? You know, you can apply it to SPY as well. I think there's a pretty simple answer. Sell the rips. Right? There's a phrase, buy the dips, sell the rips. The large caps are clearly in sell the rips territory, right? The weekly S&P 500, a little bit of correction on the weekly, but not much. Still pretty high, emanates from a daily correction period, right? So this really measures, you know, it shows effect after about 5 days. This shows effect after about 4 weeks. So we'll see if we get a little tick up and then next leg down, a tick up and next leg down. We'll see how it all shakes out. Small caps, it's a little different. Yeah, market's gotten quite beat up this year. Even on the daily, it started to come back. So on the weekly chart, you can see a correction. The daily chart, you can see the beginning of an uptrend. We'll probably get a little bit more jagged downward motion. This will come down, then it should get ready to rally. So I'm still pretty constructive on small caps. I think you should be buying the dip, but not the index, and here's why. In large caps, the markets are very efficient. What does that mean? That means that most of the information is known, and because you have people that play the blue chips, I remember that phrase, and people who just pile in the QQQ or SPY, everything moves in pretty much the same direction. Different magnitudes to some extent, but for the most part, large cap markets are efficient because everything is known for the most part. It's tough to find large cap stocks that are bargain. If the whole market's not a bargain, there won't be many bargains in the S&P 500 or QQQ. So I had somebody, you know, bothering me for, you know, dividend stocks last week, and I just can't tell you how much I'd like to find them, but they're not out there. We talked about that on Friday. So I go where the money is, and there'll be a day when dividend stocks are undervalued again because a whole bunch of dividend stocks will get wiped out and the babies will get thrown out with the bathwater, and you can go out and pick out great companies like Lockheed Martin on the cheap. But in an elevated market like this, where Lockheed Martin is a member of the S&P 500, when the S&P 500 corrects, Lockheed's going with it because it really isn't beat up yet. It's kind of in the middle of its range. So what do you remember me saying a lot last year, and I haven't said it much this year, but I have said focus on great stocks, but avoid the middle of the market, right? If you're not buying a market leader on a pullback, or you found a company where the market is missing things, avoid all that junk in the middle because you have very little margin of safety. Oh, that one looks okay. I heard this. Cut it out. Buy low, sell high. Understand the companies that you invest in. Know what you're talking about. Because otherwise, you might as well index. It'll at least keep you out of most trouble most of the time, except when the index gets crushed. And if they really do taper, the market's going to get beat up. I think they're guaranteed to taper. I don't think they're guaranteed to finish. Like I said, if you follow me on Twitter, you can see what my pinned tweet is. There you go. I don't think the Federal Reserve will finish the taper before increasing QE again. And I don't think we're going to see them raise interest rates until 2025. How's that? Who else is saying that? Remember, we got a pretty good record of getting these pretty right. So it's almost time to start thinking about QQQ, because if there's a taper tantrum, we could finally get it back down here, 330 or lower. Love to buy it down around 300 or even lower than that. But up here at 370, not too interested. 330 depends how the world is doing. 300, probably for sure buying some, right? This peak right here is going to be a hard support level to go through. So I have the back up the truck level up here. For QQQ to get down into the lower 200s, or back to where it was on the coronavirus crash, anything down here is an Armageddon scenario, given how much money's been printed and how eager they'll be to print more. Shit hits the fan. But a decent correction that doesn't go below this high, man, I almost think they might welcome it. They being the actual people that you should hear things from, which is the Federal Reserve. And they're starting to get a little bit more concerned about inflation suddenly, because they're starting to realize it could take 2 or 3 years for supply chains to really move enough to move the products and the resources that we and get the fabs built for the semiconductors to really not have to deal with some of these mini shortages. We don't have any real big shortages, but yeah, a lot of mini shortages. One thing that you might see a presidential order, maybe next year, maybe right after the midterms, of not allowing companies to export coal and oil again. We didn't export any oil for a long time. But if gasoline gets expensive, you can expect it. And if he's serious about climate change, he cuts this reconciliation deal, and then he tells the coal companies no more exporting thermal coal. So they have ways to beat inflation. It has to do with interest rates and keeping some energy at home. So those are things that we want to keep an eye on. That would hurt the energy stocks, but it would be good for us. All right. So stocks of the week. I did an update on the satellites as a service companies. They used to be SPACs, and I covered the SPAC warrants. In general, you want to hold on to all your warrants. You shouldn't be trading them. But give them, a year, maybe 2. Remember, most of them don't mature till 2025. So you're not going to really see time value loss until 2023. In the short term, you just want to see if these can run up. And there's a lot of conversions in those warrants that happen at 18 or 18.50. I forget exactly where. So if your warrant can get run up to around $8, that would probably be where I think about taking my profits. Given that I've got most of these warrants for a net cost of under $1, I'll take 800%. But in the meantime, you shouldn't be trading these warrants. They're thin markets. You're going to get screwed. Hold them. Look for a huge rip, for these stocks to get up near $20 a share. And most of them are going to. So I talked about Black Sky in here. I talked about CF Acquisition, which is grabbing Satellogic. EMY Technology, which is bringing Planetcom public. Y'all remember this picture, right? That was Planet. And then Spire. And they all have slightly different business models. Black Sky is in bed with Palantir. They have some big time contracts with governments and government agencies and big business. Recent deal with National Geospatial Intelligence Agency, NGA. I never even heard of that one. And what they're doing is they are basically combining all that data from space with Palantir's AI, selling that process, that decision-making process, to large corporations, right? Multinationals and governments. And their upside is probably 25x from here. Seriously, 25x, maybe 50x. That's how big these markets are, and they haven't been served yet. All this stuff has been done with boots on the ground and a minimal amount of sensors in the past, and almost no good satellites, because what we think of as satellites, right? We were all amazed when Google could take a picture of us on our front lawn from space. Yeah, now they can read the newspaper we're reading. Some of these guys, the technology's gotten so good. The satellites have started to get so small. The cameras are so good. So black sky is basically surveillance combined with AI. CF Acquisition doesn't have a satellite constellation right now, but they might have the best top to bottom technology. They have some big companies in Cantor Fitzgerald and Silver Lake getting in on this. Now, I swapped my shares for units over the course of the last few days. It was a thin market. We weren't all going to be able to do it. If you can, great. Here's why. Because you really do kind of want the warrants. But the warrants are cheap right now, so you could probably just buy them if you wanted to. And I believe their meeting tomorrow, or their special meeting, I think, is tomorrow. In which case, if you had units, you could actually redeem the units, get all your cash back, get $10 a share back, and then have the warrants. I don't plan to do that. I plan to keep the shares and the warrants. But then I think once there's an option market, I'm going to become a very aggressive put seller on this company. The one thing I want to remind you of is when the redemptions happen, there's a dip in the share price. We've seen it over and over again. Don't be afraid of that. It has nothing to do with the company. It's just the fact that investors who are using SPACs for a yield are just dumping their shares and keeping the warrants. Because a lot of them bought their units on the cheap, and they're going to get a small return on their money because that money at the SPAC is invested in cash and short-term cash holdings. So they're getting their 3, 4, or 5% return. Matt Tuttle talked about it on that interview that I did with him, which turned out to be a practice interview for him because he's given like 50 more. And then you redeem your shares, get all your money back, plus an interest rate, plus the SPACs, the SPAC warrants for free. We've been through that a number of times. CF Acquisition is probably the riskiest of these 4 companies. So if you were only going to do 3, you'd cut to CF Acquisition because they don't have satellites in space yet. The other 3 companies do, and they're all making money and growing really fast. So if you didn't want one, CF is the one that you don't want. Just if you're conserving money or if you don't want to bet that much on the come. The other 3 companies, though, they're all money makers. They are literally all growing. Like they're all going to double their business over the next year. I don't even remember which one it was. Oh, these guys. Black Sky has a $2.5 billion backlog, which I think they're going to close almost all of the deals. They got deals with 25 new Fortune 500 companies. I bet that's over 100 a year and a half, 2 years from now. Planetcom, it's pretty much the company that you want to be invested in for all the weather and logistics, climate change stuff. That's really what they're focused on. They just cut a deal with Google Earth, right? Alphabet, no small deal. They got a deal with Corteva Agriscience to continue developing agricultural solutions based on weather. And people are throwing money at them right now. They got $50 million from PIPE investors. They also issued, it was a couple million shares to accredited investors. Again, I swapped from the shares into the units because I was able to get them. If you can, go ahead, but I don't think it's imperative. Just understand that when the share price drops on the 2 days of redemptions, don't go nuts and sell your shares. Or if you don't own these yet, right? It's just these 2. The other ones have gone through the process already. You can buy those on the days of the dips. And I think the dip for CF Acquisition is like imminent. I think these guys are October. I didn't look up the dates, I'm sorry. Then Spire, they bought Exact Earth, and they're going to merge their data with the technology of Exact Earth. And I think they're going to be the #1 company in maritime services. But wait, there's more. Exact Earth owned a minority share in a company called Myriota, which has to do with using satellites and sensors for the Internet of Things. Think about all those things that are on the internet that where there's not good internet has a hard time operating. These guys are getting into that. So not dissimilar to AST Space Mobile, which is going to have 5G everywhere, but AST Space Mobile connects directly to a cell phone and you get voice. This company is basically just allowing computers and stuff to talk to each other. I think it's going to be pretty important with cars, right? If you're in a car, you want to make sure that you're still connected as you go through wherever it is you're driving if you're outside of a city. And remember, half of the world doesn't have 5G. Probably will never get it because it's not economical to build towers. That's why ASTS, which I didn't cover here because it's a different type of company, right? It's not a data company. These are all data companies. So Spire is neat because they have nano satellites. I mean, these are actually, their satellites are as big as a microwave, a small microwave. They have a constellation up there. They're making money. So since we bought it, since I told you to buy it, it's up about 40%. You need to get a starter position on a dip and at the same time sell a cash secured put. Or if you want to hold your breath a little, just buy a 2% position in the stock. All of these, with the exception of CFE, I think that you should be moving towards a full position. I think that all three of these, right, Spire, Planet, it's going to be called Planet and trade at PL. Right now, PL is the defunct symbol of protective life. But it'll be Planet soon on the New York Stock Exchange. And then Black Sky. So Black Sky, Planet, Spire. If you don't want the one that doesn't have satellites up already, I get it. But buy those three because I can't imagine you not making money on these. And they'll be volatile because the market's going to get choppier. And these are small companies. So people trade them. So use the trading to your advantage. And when you can get an almost oversold RSA on the daily chart, you should probably buy. What kind of questions do we have today? I don't know if your portfolio, how much it looks like mine, but S&P and QQQ were down today. My portfolio was up 1.5 points. How about you? Because I have a lot of small caps. And even Discovery and AT&T went up today, right? Remember, you got to focus on the best ideas because there's so many good ideas. There's no point in doing good ideas. Those are in the indexes. You got to find the ones at the top, right? Those outliers, those 10% of companies that are going to carry the market. You don't have to take that much risk to do it. No more risk than the average market. Focus on those asset-light sectors like EMQQ versus EEM. Pick out companies where the growth is exponential and will be for a long time. You know, the neat thing about these satellites is once they have the constellations in the air, they don't have a whole lot of expenses after that. You just keep getting contracts. 10 years from now, almost all of our data is going to come through sensors and satellites. Remember the show Person of Interest, where they had the supercomputer that knew everything through the sensors on the street, the telephones, the cameras that were all over the place? What's going on in these satellites is that times at least 10, probably 20, 30, 40, 50. Imagine being able to see half of the economy of the world at one time because you have satellites up in the air, and the weather, where all the ships are, all the trucks are, where all the trains are, all the sensors on all those places, all those things moving around, cars talking to each other, trains talking to each other, planes talking to airports. I mean, that's coming too. One of these companies is working on that already. Upgrades in air traffic control. It's just amazing. When you have the wider field of vision of a satellite versus camera on a pole, it starts to become pretty apparent how much more data is going to be there and how fast it's going to be moving. And by the way, 5G is going to last for at least a decade. So I was watching the Qualcomm guy talk about 6G, and it's at least a decade away. So the next upgrade in speed is about a decade away. All right, let's call it today. Call it a day. I have leftover bratwurst from a tailgate party. Oh, actually, no, it was a BBQ. I went to a BBQ. That's where I have the leftover bratwurst from. I was thinking it was a tailgate party for the Brewers yesterday, but it's not. Brewers won the division, though, with a week to go in the season. That's weird for me. I'm not from New York, where the Yankees would run away with it. So, go Brewers, go. Go Pack, go. I don't know how they won last night, but they must be a little better than I thought. If you have questions, ask them in the chat. I'll be around. I will have the retirement income options up tonight, and ask questions in the comment sections of that. All right, take care.